Good morning, Trinidad and Tobago. Welcome to the Bourse Report. And I wish it was good news, but we have to go through these motions, and companies have to go through the motions and the pains of COVID-19 as well, so we can get straight into it. Welcome again, and let me see if I can make sure and share the screen. And we're talking today about Sagicor as well as Trinidad Cement Limited. In the case of Sagicor, since their listing, they would have published the results for their full year fiscal 2019, which, as expected, wouldn't really incorporate too much of the effects of COVID in the first quarter, and certainly will not anticipate what's going to happen in subsequent quarters. And similarly for Trinidad Cement Limited, we're looking at the first 3 months in terms of financial results for the first quarter of 2020. So let's get straight into it. For Sagicor, for the full year 2019, the group recorded earnings per share in US dollars of 55 cents on a fully diluted basis, which is a 9.9% decline from the 61 cents recorded in the financial year of 2018. Now, excluding one-off costs and expenses, the diluted earnings per share from continuing operations were just around 54 cents, or a 6.5% increase from the 51 cents recorded in the prior comparable period. Now, total revenues were up just around 34.7% from 1.38 billion to just around 1.8 billion. That was offset by a proportionate increase in total benefits and expenses. Ultimately, net income attributable to common shareholders did increase just 1.9% from 43.7 million US to 44.5. Now, the numbers tell a slightly improving story. On a fully diluted basis, it wasn't as good. But the real concern for shareholders has been the share price of Sagicor since its listing on the Toronto Stock Exchange way back in December 2019, which feels like ages ago right now, to be honest. And that Canadian price, as we can see in that very bright green line, has continued to deteriorate over the course of 2020 since its listing on the Toronto Stock Exchange, from that $10 Canadian price way back on the 10th of December to the current price of around $5.95 to $6 Canadian. Now, to put that in perspective, what does that mean for shareholders? Well, in terms of a TT dollar equivalent price of the old Sagicor shares, that would mean a fall from the equivalent of $11.78 TT at the start of listing back in 2019 to a current price of $6.74 TT. And really, that is actually now below the pre-acquisition price, in this dotted line in blue, of around $7. And the pre-acquisition announcement price was the price it was trading at just before it was announced that there was going to be some acquisition activity. Now, what's in store for Sagicor? Well, of course, the COVID-19 impact is going to be quite significant, and it has certainly put some doubt into some of the transactions that were being planned. In terms of acquisition activity, Sagicor has been a bit busy. In Trinidad and Tobago, they would have acquired certain assets of Pico back in 2019, late 2019, and that deal is still going ahead, subject to certain regulatory approvals. Their long-touted or initial transaction with respect to the acquisition of Scotiabank's insurance operations now has a question mark on it. Indeed, Sagicor would have noted that under the current circumstances, it couldn't be guaranteed that this deal would go through as planned. They have until June 30th, 2020 to come to some arrangements, perhaps to delay the deal, or if not, maybe it's going to come off the table, or if they're going ahead. But certainly they did introduce some element of doubt in their latest earnings report there, mentioning the Scotiabank Trinidad acquisition specifically. And in late 2019 also, well, September 30th, 2019, they would have bought a 60% stake in Advantage General Insurance Company from NCBFG to widen their general insurance portfolio, particularly in Jamaica. So on the basis of fair valuations, and again, the stock is trading at just around $5.95 Canadian, and it offers investors a dividend yield of around 5.2%, which is below its Canadian peers of around 6%, and is trading at a sub-8 price-earnings ratio, which is also below its peers in Canada of around 8.5 times. On the basis of some questionable acquisition activities, and questionable in the sense of whether or not they will go through, and certainly the impact of COVID-19 on their general business operations, we are downgrading our rating on Sagicor from a buy to a neutral. Turning quickly to Trinidad Cement Limited, the earnings per share recorded for the first quarter of 2020 was just around 1 cent per share, which was an 80% decline from that first quarter 2019 result of around 5 cents per share. So certainly a very marked drop there. Revenues, however, didn't fare too badly. They were down just around 2.8% from $426 million to just around $414 million. And gross profits did, however, decline significantly in terms of percentage terms, 16.5% from 142 to 118.9. Overall net income fell from $32 million to just around $10 million for that first quarter. Now, revenues have seemed to be fairly resilient when compared to the last couple of comparable quarters. As we can see, cement, which accounts for the majority of revenues generated, cement sales fell from 410 million to 396. Concrete sales fell from actually increased from 15 to 17 million. Packaging increased from 1 to 2 million. However, it's important to note for investors that this first quarter did incorporate just about 2.5 months of generally regular activity at an economic level for Trinidad Cement Limited in the Trinidad operations, in particular, subsequent shutdowns and the prolonged effect or the expected prolonged effect from the impact of COVID-19 on the general economy and economic activity is probably going to weigh on not just TCL business operations, but most companies, private and public listed. So on the basis of declining profitability, inconsistent dividend payments, continuing competitive pressures, and the COVID-19 impact, Bourse maintains its sell rating on Trinidad Cement Limited. But that's it for this week's edition. For much more information, you can give us a call at 226-8773, email us at invest@boursefinancial.com, or check out our website at bourseinvestment.com, where we have our full research articles, and it's absolutely free. That's it for this week's edition. Hema, it's back to you. See you next week.